Now, is Google going to come away a winner while Microsoft and Yahoo, their search deal, waits to close? And joining us to talk about these companies, we've got Colin Gillis, a managing director and senior analyst at Brigantine Advisors, and, well, an expert in the Internet. Colin, it's good to have you with us. Thanks very much.
Always a pleasure.
Tell me about what's going on with Yahoo. Let's start first with the fact that, they own some properties overseas, specifically in Asia, and there's been a recent announcement that they're selling a little bit of their stake in Asian properties, and they've got some others. What's the story with these other ownership stakes?
Yeah, exactly. So, Yahoo is becoming a much more complicated story as the turnaround efforts progress. And one of the things that gets investors very excited, and, Yahoo shares had a strong week, is the Asian assets. That they have a 40% stake in Alibaba Group, which is the company run by Jack Ma, that is the majority owner of Alibaba.com. It's a B2B site in China. It's extremely popular, and it's one of the, the hot China companies right now. It's up 300% year to date, and Yahoo also bought 1% of Alibaba.com when this company went public, right? And so they turned around, they have spun out that 1% for about $150 million. That's actually small change to Yahoo, and compared to the 40% stake that they own in the parent company, which is not liquid. So while they did sell a very small portion as a trade that they had invested in, their core holdings in the Alibaba parent company is not for sale.
All right, but this sale indicates what? Because I think in your note you said this means maybe the relationship between Carol Bartz at Yahoo and Ma is getting better, that this is a love dance.
Well, actually, it's the other way around, because Carol Bartz feels that Alibaba has hurt the Yahoo China name. Back in the day, because it's all about Alibaba. It's not Yahoo China, right? So Jack Ma.
So she wants it to be Yahoo China instead.
That's right. And he has taken the relationship to build up Alibaba. And in fact, they did the sale on Alibaba's 10th anniversary. So it was a little bit, when it was done, it was not communicated appropriately, only done at lower level executives. It dropped Alibaba shares 12%. So while everyone at the company was trying to, celebrate the 10th anniversary, shares were down notably, and, it was a little bit of a cold shoulder move on Yahoo's part. So expect some strange relationships between Jack Ma and Carol Bartz.
All right, but those relationships are pretty valuable right now, at least for Yahoo, right on the balance sheet. I mean, are these properties worth a lot?
Well, see, here's the thing. So, as much as we want to get excited too, along with some of our peers, we have to point out that you just can't eat paper, right? So the Yahoo's, if you really, what we want to see in Yahoo is for Yahoo itself to become a good investment, not just the fact that they are fortunate enough to own a 40% stake in a company that Jack Ma is running appropriately and, and doing a good job in. So, Yahoo is still a turnaround effort that's a year or so away from coming close to the turn. They have to get smaller before they can grow again. They're looking to diverse hot jobs. We think that the small business unit is up for sale. Personals may need to also go.
So what ends up being left? I mean, are they going to be doing changes to the homepage? Are they going to change email? What are they going to do?
So what's left is key properties, finance, sports, email, the homepage, and they want it to be your home on the web, right? I mean, ultimately Yahoo should be the place where we store our music. They push out the videos that we want to watch.
I think Steve Jobs has another thought about that. Right?
Yeah, he does, and so does Tim Armstrong over at AOL. So it's going to be a competitive landscape for Yahoo to be the type of company that they're hoping to reemerge themselves into.
And you still got a sell rating on the shares?
We do have a sell rating. We were saying that we expect that the shares were to tick up a little bit, but be ready for the double dip.
Double dip. All right, we're going to continue the conversation. We've got much more with Colin Gillis of Brigantine. He's also got the highest estimates on earnings for eBay. So we're going to find out, why is he so bullish? This is Taking Stock on Bloomberg. We're speaking with Colin Gillis of Brigantine Advisors. Colin, before we get to talking about eBay, I just want to kind of give the juxtaposition. We talked about Yahoo. You got a sell rating there. What's the story with Google right now? They're going to take advantage of all this waiting that goes on while Microsoft and Yahoo figure out what to do with the search business?
Right. So we do have the sell on Yahoo, and we do have a buy on Google, right? We think Google is one of the best companies to own in the space. And the reality is that while Yahoo and Microsoft go through this process of trying to get approval for for Microsoft to take over Yahoo search, and then the integration, process that will happen subsequently. There's a full year. We expect that the deal won't even close until Q2 of 2010, and then take the rest of 2010 really for Microsoft to be operational. So Yahoo search is in limbo, and advertisers are slowly moving away from it. And Google is the main beneficiary of this, right? Why are you going to work on a platform that's about to go away? And in fact, an interesting point is that eBay is now running ads. They're monetizing their pages. They're switching from Yahoo to Google. So that's yet another major customer.
You are so smooth. I love it. You're giving me the segue. We know this. You're giving me the segue to now talk about eBay. You say Google's running the search on eBay's site.
That's correct. That's right.
And you also say that eBay has improved the search functionality for buyers as well as sellers.
That's correct. And so eBay is where we expect Yahoo to be in a year. eBay is coming out of its restructuring. In fact, it was 2 years ago in the September quarter when they had the big Skype write-down, and then they had to bring in new management subsequently. And the new team has done a very good job. They're like, we want to make it easier for buyers and sellers to do business, right? And it's really a de-emphasis on auctions and more of an emphasis on fixed price listings. Come in, buy what you want, get it at a great price, and have it shipped to you, and have a great transaction experience.
And don't forget, and have it paid by what?
PayPal. Absolutely, right. 65% of all the transactions are done using PayPal, and PayPal is expanding off of eBay and onto other platforms, whether it's Dell and other big merchants are accepting PayPal just because it's so much easier for buyers. We don't have to fill in all the information again.
So you've been clicking on a lot of PayPal buttons, I can tell. Jeff Donahoe, the CEO of eBay, he said today that PayPal could eventually be bigger than eBay. Possible?
Well, absolutely. And, the PayPal asset is tremendous. What gets difficult in eBay is that the marketplace, which was their core business, it's been flattened, it's been declining, and now it's flat. We're seeing stabilization. PayPal assets, continues to crank away. That's always been a growth driver. So that's a great business. Not only can it expand in the United States, but it has tremendous international opportunities as well. In fact, we could look for revenues to double over the next 3 years at PayPal. So that's strong growth.
I'm glad you mentioned international, because didn't they just do an acquisition in Korea?
That's right. They bought Gmarket, which was the #1 auction site, and they had owned the #2 auction site called IAC, Internet Auction Company. So now they own #1 and #2. Korea is going to be their footprint for Asian expansion, into Japan and across the region. So they have a very strong strategy of ownership, unlike sort of the Yahoo with its a minority stake in Alibaba. Here eBay is controlling its destiny in that region.
All right. Now you mentioned this idea, right, of these companies owning stakes in other companies, like Yahoo having this stake in Alibaba. There's the one Mercado Libre, right? That's the one that eBay has a big stake in. Are they going to buy the rest of the position of
So
Mercado?
That's a great question, because the fact of the matter is that eBay's cash is considered international cash. So it's not kept in the United States, and if they can't use it for buying back their own stock or for U.S. acquisitions, but they can use it for international acquisitions, and they own 20% of Mercado Libre, which is the dominant platform in South America. And if they were to acquire the rest of that and use that cash, that certainly would give them a nice, cohesive worldwide strategy. I wouldn't be surprised to see that situation occurring.
Does the stock? Well, let me ask you. You got what kind of recommendation you got on the stock of eBay?
So we have a buy rating. We've got a $30 target, and we're actually street high for the September quarter of 40 cents of EPS, just because there's a couple of things, right? The turn has happened. We're seeing same-store sales on eBay merchants were positive in August for the first time all year long. So, there were some green shoots in the June quarter. We actually saw sold items were up 3%. It's just that average selling prices were down.
Come down a little bit.
Had come down. That's right.
I think, right?
About 4%.
4%.
And
I was going to get it wrong with you.
People weren't buying the more high-ticket items. That's obviously indicative of what's going on in the economy. But we're seeing more and more positive data points. When you combine that with the fact that you've got PayPal growth and just a better overall experience for people to liquidate goods. So eBay is all about value, not necessarily auctions.
All right. So the idea that this is just going to be a big commerce site, and they're using PayPal to run all the business through the system.
That's correct. And they don't own any of the inventory. It's actually quite a nice business model.
Imagine, you don't have to actually own the inventory. You just take a piece every time it changes hands.
That's the name of the game.
Don't we all wish that was true? All right. I want to thank you very much, Colin Gillis, coming in from Brigantine Advisors, sharing your thoughts with us on the internet. A sell on Yahoo, a buy on Google, and a buy on eBay.
Thank you.
Thanks a lot.